Hi folks, welcome to the late September episode of Export Exchange, US Deck's video series designed to keep you up to speed on global dairy markets. I'm Al Levitt and I'll be joined shortly by my colleague William Laux. I'd like to start today with a snapshot of where US dairy markets are heading, particularly going into the fourth quarter. And so for today, I'll focus on our main export products, cheese, milk powder, and whey. So let's start with the cheese market. At the time we're recording this, the U.S. spot cheddar block price is more than $5,700 a ton, up $2,100 in the last month. And the fundamentals paint a picture of a pretty tight market. After a slow start to the year, U.S. cheese production was up nearly 3% in June and July, which is pretty good growth. But U.S. commercial cheese demand was up even more, increasing 3.4% in June and July as restaurants reopened throughout the country. And so as a result, inventories declined at a historic pace. From the end of April to the end of August, U.S. cheese stocks declined by more than 45,000 tons, by far the biggest drop on record for that time period. And remember, this is happening during a season that U.S. cheesemakers are almost always building inventory. Now at the same time, much lower U.S. cheese imports this year are adding to the tight supply. From April to July, imports were down 18%, and year-to-date, imports are the lowest since 2014. And then we've also had a new customer in the cheese market this year, the U.S. government. Government feeding programs have absorbed at least 60,000 tons of cheese since April, maybe as much as 80,000 tons or even more. And these government programs are in place for the next month or two, and then it remains to be seen what will happen after the U.S. presidential election. But in the meantime, stronger U.S. milk production, which William is going to talk about in a few minutes, should mean strong cheese production growth in the months ahead. Now, shifting gears to milk powder, the U.S. non-fat dry milk skim milk powder market has firmed in the last 6 weeks. Exports have moved at a record pace, and production has slowed with more milk going into the cheese vat. Spot prices at the CME have increased more than $300 a ton since August 11th. And as we're recording, the price is approaching $2,400 a ton, the highest since March. So let's break this down a little bit. During the lockdowns earlier this year, a lot of milk went to the dryer, but this summer that reversed. In June and July, U.S. non-fat and skim milk powder production was down 1.4%. And for non-fat dry milk alone, production in the last 3 months was down 7%. At the same time, U.S. powder exports have been record highs this year. Exports are up 28% year-to-date and up a whopping 64% in June and July. And like with cheese, U.S. powder inventories declined at a historic pace this spring. They fell by 47,000 tons in May and June. And not only was this a huge drop, but like cheese, it happened during a time when inventories are normally building. Stocks did rebound slightly in July, so heading into August, inventories were pretty much in line with the previous 3 years. Now then, in contrast, the U.S. dry whey market has been softening since June. And again, as we're recording this, U.S. dry whey is around $700 a ton. It's the lowest that it's been since last November. U.S. domestic use has fallen off since the lockdowns, especially with the closure of gyms and health clubs where whey protein products are sold. And with greater cheese production comes more whey production. Dry whey output was up 4.6% in the last 5 months. And we've seen recovering whey exports to China this year. It's absorbed some of the added production, but it hasn't been quite enough. So inventories increased by nearly 10,000 tons since January. And at the end of July, stocks are up 25% from last year. So those are the major commodities. A couple of our other key export products. The market for whey protein concentrate and whey protein isolate remains weak. Global demand has been pretty soft. In contrast, demand for lactose is good, and that's keeping our lactose market steady. So that's a roundup of market conditions for our major export products. Now I want to hand it off to William to tell us what's happening with milk production on a global scale. William?
Thanks, Al, for that summary of current market conditions. This week, I'll be providing our closer look, and I'm going to be talking about the milk supply outlook specifically, especially what it means for your business. I'll start here in the U.S. Looking at U.S. milk production through August, we can see that U.S. farmers are still very good at what they do. Year to date, official U.S. milk production is up 1.4% over a year ago, including a higher percentage of milk solids per liter and that somewhat undersells overall supply even. We talked in a previous export exchange how when COVID-19 first disrupted US markets and dairy demand, farmers pulled back milk production back in May and early June, as you can see on the chart. But farmers pulled back on production by changing feed and milking practices rather than reducing cows. So they were able to increase production very quickly as demand for dairy returned. In July, milk production grew by 2% and August by 1.8% despite strong heat across much of the US. So we really should expect that growth to continue in the back part of the year. Over in Europe, production is also seeing growth over their summer. Milk supply was up 1% in June and 1.6% in July, even as milk production fell in Italy and the UK. New Zealand season has started ramping up and pasture conditions appear favorable for growth. August came ahead 5% over last year. And granted, that's off a small base as the season is just now starting. But even still, the milk appears to be available as we look to the final months of 2020. So overall, milk supply from the major exporters is accelerating after a slow March, April, May, as farmers were really watching what was happening with COVID-19. But let's really hammer in on what this means for your business. Well, number one, you should expect sufficient milk production growth out of the major exporters, and it's going to be available to meet international demand needs. I expect milk production from the 6 largest exporters in the second half to come in around 1.4% year over year after a 1.2% growth in the first half. It is worth considering instead whether there's a risk of supply outrunning demand. However, international buying so far in 2020 has been pretty robust in spite of COVID, especially from the Middle East and Southeast Asia. That has kept exporter inventory levels relatively light, and assuming that appetite for dairy remains, then this milk supply increase out of the US, EU, and New Zealand really shouldn't overburden the market too much. Now, there might be some nuances depending on product mix, like whether there's more whole milk powder or cheese being made rather than cream and SMP, as cream and butter prices are historically weak right now. But overall, demand is going to be the main determinant of market balance and price rather than supply. So that's it for this month's Export Exchange. We appreciate everyone tuning in and look forward to talking next time. Thank you all.